Differences between security market and stock market. Security market versus stock market. Security market is a component of the wider financial market where securities can be bought and sold between subjects of the economy, on the basis of demand and supply. Whereas, stock market is a broad term for the network of exchanges, brokerages, and over-the-counter venues where investors buy and sell shares in publicly traded companies. Though people sometimes use stock market to refer to the New York Stock Exchange, NYSE, or the Nasdaq, these exchanges are components of a wider global marketplace. The purpose of security market in economy is used to attract new capital, transfer real assets and financial assets, determine prices which will balance demand and supply and provide a means to invest money both short and long term which can ensure liquidity, price discovery, capital formation, and risk management by enabling businesses and investors to grow their wealth. Whereas, the purpose of a stock market is to facilitate the movement of funds capital, from the savers, investors to the borrowers' companies, through stock exchange platforms. Security markets encompasses stock markets, bond markets and derivatives markets where prices can be determined and participants both professional and non-professional can meet, whereas, stock market encompasses the buying and selling of financial instruments like stocks, bonds, and derivatives, primarily through stock exchanges and over-the-counter markets. It's a broad term that includes the infrastructure, exchanges, the trading activity, and the participants involved. Securities markets can be split into two levels: primary markets, where new securities are issued, and secondary markets where existing securities can be bought and sold. Whereas, secondary markets can further be split into organized exchanges, such as stock exchanges and over-the-counter, where individual parties come together and buy or sell securities directly. For securities holders, knowing that a secondary market exists in which their securities may be sold and converted into cash increases the willingness of people to hold stocks and bonds and thus increases the ability of firms to issue securities. A securities market is used in an economy to attract new capital, transfer real assets and financial assets, determine prices which will balance demand and supply and provide a means to invest money both short and long term. Whereas, stock market is used to allow investors to buy and sell shares of publicly traded companies, facilitating trading and investment as a whole. There are a number of professional participants of a securities market, and these include brokerages, broker-dealers, market makers, investment managers, speculators, as well as those providing the infrastructure, such as clearing houses and securities depositories. Whereas, the main participants in the stock market include retail investors, institutional investors, market makers, and sometimes, speculators. These individuals and entities engage in trading, investing, and providing liquidity within the market. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.